Alright, here we go. Alright, good afternoon everyone. Today is Tuesday, the 8th day of July, 2014. Let's start out with the results. Today, on the Russell, we made 42 ticks profit. On natural gas, we made 1 tick profit. On crude, we made 23 ticks profit. And on gold, we made 11 ticks profit. Today it took us 1 minute and 1 trade to get to $110 a contract, and we took a total of 14 trades today. So far in the 5 days of July, we're up $2,002.50 a contract, $2,250 per contract. Let's see, if you apply an $8 commission to every trade we've taken, you would be up a net of $1,410.50. If you apply a $5 commission to every trade we've taken, you would be up a net of $1,632.50. That is where we stand on the month, guys. Not bad. Our average is back up to $400 a day. It'd be nice if I could keep that average all month, then we would have a new high. You know, our monthly high on the year, actually in the last 2 years, is 7,555. We did it in April. That is 1 contract in the 2 hours that we trade. Okay, that is that. Let's see, to take our free trial, all you need to do is go to our homepage at CFRN.net. Go to the homepage at CFRN.net. In the right-hand column, it has a place to put in your name and your email, and click register for a free trial. Once you click register for a free trial, you'll be sent a confirmation link to the email address you put in here. So make sure you put a good email in there. A valid email where you'll be able to get the confirmation link. Okay. Once you click on that confirmation link, then you'll get a couple more emails. One will be stuff all about us with the links to the live trading room and the password to get into the live trading room for your luxurious 5-day free trial. And then you'll be sent a second email that says, please watch this video, in the subject line. Please watch the video, because then you'll be up to speed, well, near up to speed, on your first day of the trial. Otherwise, the first day of the trial can really be overwhelming. Okay? And we don't want you to be overwhelmed. All right? So again, just go to CFRN.net, put in your name, put in your email address, click register for a free trial. That's it. All right. Now the trades. I'll start out with crude, because that seems to be what I usually do. We had quite a few trades in crude today. I believe we did. Yes, we had quite a few trades in crude. Alright. Alright, our first trade on crude was an up close above the trend line. Okay. It happened right in here. We got this up close above the trend line with the bullish divergence right there. Alright, it ran up, and that was it. Green line got up into the cycle. It pulled back. It gave another opportunity right here. Now, I had said that I was going to go really slow and go over the trades really slow. Well, not all the trades, but just go over the actual trade setup really slow to one of our guys who's on the trial. So that's what I'm going to do. All right, I'm going to take my time here and bring up this and go step by step through the trades that I took using this as a reference. Alright. Now, on this particular trade, well, there were a couple of things happening. You know, this was in the pre-market right here. Okay, all this was in the pre-market right here. What you look for, step 1, the MA1, which is the red and blue line right here on price, crosses above. For a long trade, it would cross up above the BBC. The BBC is the green line here on price. Step 2 is price pulls at least 1 tick away from the BBC. You see that right there? Step 2, price pulls at least 1 tick away from the BBC after the cross. Okay. And step 3, well, you would draw a trend line. Once you have a swing high in place, you would draw a trend line. Now, this is pre-market. That's why there's nothing drawn on it. You would draw a trend line down the tops. Grab it at the wick and draw it down the corners of the bodies or the tops of the wicks, whichever you happen to have for bars. all right? The corners of the bodies or the tops of the wicks. Like right here, right now, in natural gas, you would have drawn one like that, and you would be going long right here at 172. Okay, I just did. I just got long at 4172. What you anticipate is that this green line, this divergence down here, is going to go away. The green line is going to work its way up into the cycle. That's what you anticipate. Okay, I'm going to slide that off to the side so I can continue showing this step by step. You have to have divergence between the green line and the cycle. When I talk about divergence, it's all within the slingshot. It's not divergence between price and any oscillator. The divergence is all within the slingshot. Okay? When I say divergence, what I'm talking about is the green line is diverging from the direction of the cycle portion. The cycle portion of the slingshot is the red and blue up here, and the green line in the slingshot is right here, the green line in the slingshot. Alright, now that trade that I did on natural gas, you see the green line? Just got up into the cycle. That's what I was expecting. So I just took my risk off the trade. I'm just going to lock in a couple of ticks profit on that, because when the green line gets into the cycle, you anticipate that it's going to pull back. Okay? You anticipate that it's going to pull back and give you another opportunity. Alright? So that one just took me out with plus a couple of ticks. Alright? Now I'm not keeping track anymore because we're not in the live trading room. Now it's just making money. Alright, so let me scroll a little bit farther along here. Alright, this was the first trade that we took. Now, it started to pull back. You can see there's a trend line there. I mean, just like this one over here, just like it just did. There's a trend line. And it closed above the trend line right there. Alright, like it closed above the trend line right here. We had some bullish divergence here, meaning the long-term direction, which is the cycle, was up. Alright, the short-term direction, which is shown by the green line diverging, was down, but we anticipated that the short-term direction was going to change back to up. Alright, and that's what happened there. When we got the up close right there and it moved up. Alright, that's what we did right here when we took our trade right here this morning on the crude. That first trade on crude, you know what? I didn't even take credit for that trade on crude. Because, oh yeah, I did. I did. I put two of them together. This one here and that one there. Alright, that's how I was at 34 ticks or whatever it was at that time. The first trade on crude, I think I got like 10 ticks profit or something like that on that one. And then on this trade over here, I got 20-something ticks profit. Because at the close of this one, I was at plus 34 ticks. Alright, but you see this one right here is just the same as that other one. All the rules are the same. It's just in the opposite direction. And when the green line gets down into the cycle, right here, you anticipate it's going to pull back and do it again. Like right over here. There was the up close, it moved up, the green line got up into the cycle, you anticipate it's going to pull back, like this. And it already has. Okay, so you can start drawing your trend line again. That's it. Alright, the next trade we took on crude was a down close below the trend line. Took 1 tick profit on that. Right here, you see there's no divergence down here. So we didn't take the short trade here. There's no divergence. We took this short trade, the down close right here. There was some divergence. It stopped us out minus 8 ticks. We took a long trade in here, up close above the trend line. And I believe we got 4 ticks profit on that one. There was nothing in here because we never got the close above the trend line and then the cycle started to head down. Alright. You don't want the cycle to be going against you at a 45-degree angle or more. Alright, you don't want to trade against that. Because that usually means things are changing directions. I mean, you can see right here. When the cycle started going down like this, there was no more up. Okay, it was all done. Let's see, then... Oh, and that's it. That's all we had. There was a long trade right here a few minutes ago. I would have been out of that at break even. Okay. But that was it. That was it on the crude. There was a losing trade in here somewhere. Right here. This losing trade. and that put us at plus 23 ticks right there. Okay, so the high on the day for the crude was 35 ticks, and we gave back 12 of those net. Okay. Alright, that was crude. Now let me do the Russell. Alright, we had some big trades on the Russell today, and now we're using the same trade setup. The same exact trade setup. Well, I'm sorry, the same indicators. Okay, I want to show you the one variation of that other trade setup. I'll get to that in just a minute here. Okay, you can see in the morning here, we missed this first trade right here. I didn't get into it in time, and I said it was going down to the weekly trading zone here at 76. It did. Then it dropped through the zone, and there was something somewhere in here that we took a trade. We took a trade in here. I think our very first trade of the day was right in here, I think, was our very first trade of the day. And we took 11 ticks profit on it. Okay, because we got our goal for the day on the Russell, on the first trade of the Russell, and it was in the first minute. But there was a down close below the trend line right here, or actually off the BBC, right there off the BBC. And this is the one variation. Okay. Oops, let me bring that back up. The one variation. Step 1 is the MA1 crosses below the BBC. Okay, for a short trade it crosses below. Step 2 is it pulls away, which it did in here. Then step 3, it actually touches the BBC, which it did right there, and then closes in the direction of the cross. This would be a down close because you had a down cross. Okay, a down close, down cross. So you would have a down close off the BBC. And step 4 is the divergence down here. You have to have the divergence and this is important, and the cycle has to be the right color. So the variation between this one and this one is with this trade, cycle's got to be the right color, it has to hit the BBC. Okay, the cycle's got to be the right color and it has to hit the BBC. You don't need a trend line, but you should probably have one anyway, because you don't know if it's going to pull all the way back up to the BBC. Alright, that's it. Those are the trades that we take in here. Alright, here, I'm going to leave this here so you can look this over. If you want to take a little screenshot of it, in the upper right hand corner right now there should be a little camera. You can snap that picture right now if you want. Alright. Yeah, there was no divergence when it touched it right over here, Bob. You're right. There was no divergence over there. Okay? So that's it. The next trade that we took on the Russell was a break-even trade, looks like. Then we had a trade right here. This one, I think we got 13 ticks profit on this one. We missed the down close below the trend line right here. Missed the down close here. And on this one, what did we get? 14 ticks profit on this one. That put us at plus 38 on the Russell. Alright, and we missed that one. And there was one other one that we took in here where we got 4 ticks profit somewhere. You know what? I was trading so much I must have not put it on. But we did get 4 ticks profit somewhere else. And that was it. That was it for the Russell today for us. Okay, we ended the Russell at plus 42 ticks. Plus 42 on the Russell. I didn't do anything with the ES. I don't think. Did I even point anything out? I did. A down close there, I said, but the cycle was going up too far. And that was early on. After that, the cycle was back and forth in the middle the whole day. So we really didn't have anything that we could do with the ES today. Soybeans, we didn't do anything with soybeans today. They were just a choppy mess right in here all morning. Didn't do anything. It had a move down right at the end, but not a tradable move. Okay, gold. Let's see, what do we do on gold? We just had the one trade there on gold. We took a short trade in here and we took 11 ticks profit on that one. There was a nice trade right here that we missed on the gold, and then I was looking for it to get down below this box, and it was just choppy in here. There really wasn't anything that we could trade in there on that. Okay, So gold got really choppy and sideways. We ended gold with 11 ticks profit. And the natural gas, well, I just took a couple of ticks profit on that move a minute ago. But right here you see we have an up close above the trend line. We have bullish divergence. The cycle is red. We anticipate the green line is going to get up into the cycle. Now when the green line gets up into the cycle, like it did over here, you should be putting in a higher swing. You want to have that higher swing because you want to continue the uptrend. All right. You should have on the close, when this green line gets up into the cycle, you should have a bar that closes above there. I don't mean just a wick. It's got to have a close above that bar. All right, because if it gets a close above that bar, let's say it closes there, then you can still draw a trend line up the tops. So you have higher highs in place. You have higher lows and higher highs. All right, so you're still in an uptrend and you're still looking for long trades. That's it. On natural gas today, we just had a couple of trades. We had this one right here, we took 1 tick profit, and this one right here, we took a break even. That was it. That's all we did on the natural gas. Okay. Now you see in here, if this does not close above that horizontal line that I put in there, then this is topping action. All right. That's it. So the long trade would have been from right here, all right, at 176, and once it had 4 ticks profit in the trade right here at 180, I would have moved my stop to break even, so I would have been out of the trade right here. Okay? That is that. All right. This particular recap is, I know I'm way behind getting the recaps loaded on the website, but I'm going to load this particular recap later today because I went slow in here for everyone's benefit. All the folks who are on the free trial right now, everybody who was in there today. So you guys could watch this video over and over and over again. All right, those are the rules of the trades, and that's it. I am done. Let me go back to the spreadsheet really quick. All right, here's the spreadsheet. So we're up 42 ticks on the Russell, 1 tick on natural gas, 23 on crude, and 11 on gold. We're up $2,002 on the month so far for the 5 days we've traded. All right, and the free trial. If you have not taken the free trial, go to CFRN.net and stick your name and email address in there. Click register for a free trial. All right. You'll get a confirmation link. Click on the confirmation link, and then you'll get more information. All right. So on the day, what do we end up? 420, 430, 660, 770. $770 a contract today. All right. Not a bad day. We were up higher at one point. Yeah, I wish we had plenty of volatility like today, every day too, Jim. All right, so with that, I am going to stop the recording.